If you search on YouTube for trading strategies, you'll find thousands of videos. Best strategy, 95% win rate. Turn $100 into $10,000. So I decided to test something. I backtested 20 popular trading strategies that everyone recommends online. Indicators, candlestick patterns, breakouts, even the famous smart money concepts. And the results shocked me. Out of the 20 strategies, 18 of them completely failed. Not slightly bad. I mean consistent losses. But here's the crazy part. The 2 strategies that actually worked are the ones almost nobody talks about. So in this video, I'll show you what strategies I tested, why most trading strategies fail, the 2 strategies that actually worked, and if you're a beginner trader, this might save you months or even years of frustration. Part 1. Why I did this experiment. When I first started trading, I did what every beginner does. I searched how to trade, and immediately I fell into the strategy rabbit hole. One video says use RSI divergence. Another says use MACD crossover. Another says use support and resistance. Another says use candlestick patterns. And suddenly you have 50 different strategies on your chart. But none of them work consistently. So I started asking a simple question. Do these strategies actually work? Or are people just repeating what they heard from someone else? That's when I decided to run an experiment. Part 2. The rules of the test. Before testing the strategies, I created clear rules. Otherwise, the results wouldn't mean anything. Here's how the test worked. I backtested each strategy on 100 trades. Same market. Same time frame. Same risk management. For every trade, risk equals sign 1% per trade. Take profit equals sign 2% reward. So the risk to reward ratio was 1:2. This means even a 40% win rate could still be profitable. Then I categorized the strategies into groups. Indicators, candlestick patterns, breakouts, trend following, and price action. Now let's look at the result. Indicator strategies most popular. Let's start with the most popular strategies on YouTube. Indicator strategies. These included RSI overbought oversold, MACD crossover, moving average crossover, Bollinger Band reversal, stochastic oscillator. These strategies are extremely popular because they are simple. When the indicator crosses, you buy. When it crosses the other way, you sell. But here's the problem. Markets don't move in clean signals. They move in noise. And indicators react after the move already happened. So what happened during the test? Most indicator strategies had win rates between 30% and 45%. And with spreads and small losses stacking up, the account slowly bled down. Not instantly, but consistently. Out of 7 indicator strategies tested, 6 failed. Only 1 survived. And even that one was barely profitable. Part 4. Candlestick patterns. Next, I tested candlestick patterns. These are extremely popular among beginner traders. Patterns like hammer, doji, engulfing, morning star, shooting star. The idea is simple. A candle pattern appears and it signals a market reversal. Sounds great in theory. But in reality, candlestick patterns appear everywhere. And most of the time, they mean nothing. During backtesting, I saw something interesting. A perfect hammer candle would appear. Price would reverse for maybe 2 candles and then continue in the original direction, meaning the pattern was too weak to change the market. Out of 5 candlestick strategies tested, all 5 failed. Win rates around 45%, which is not enough to stay profitable long term. Breakout strategies. Next were breakout strategies. These are based on the idea that when price breaks a key level, it will continue moving in that direction. Examples include support and resistance breakout, trendline breakout, range breakout. These strategies performed better than indicators. But there was a major issue. False breakouts. Price would break a level, trigger the trade, and immediately reverse. This happened a lot. So while some trades made big wins, many others ended in small losses. Out of 4 breakout strategies tested, 3 failed. One strategy was slightly profitable. But again, not amazing. The two strategies that actually worked. Now here's the interesting part. Only two strategies passed the test. And they had something in common. They didn't rely on indicators. They relied on market structure. Strategy number 1, trend pullbacks. Instead of chasing breakouts, the idea is simple. Wait for the market to trend, then wait for a pullback, then enter when the trend resumes. Why does this work? Because markets move in waves. Trend, pullback, continuation. This strategy had a win rate around 52%, which doesn't sound huge. But with a 1-2 risk reward, it was clearly profitable. Strategy number 2, liquidity sweeps. This one surprised me. Markets often move to areas where traders place stop losses. For example, above previous highs, below previous lows. Price will sweep those levels, trigger stops, and then reverse. When entering after the liquidity sweep, the win rate improved significantly. This strategy had a win rate close to 55%, which was the best result in the entire experiment. The real lesson. But here's the important part. The goal of this experiment was not to say, this strategy is perfect, because no strategy is perfect. The real lesson is this. Most trading strategies fail because traders focus on indicators, signals, patterns, instead of understanding how markets actually move. Markets move because of liquidity, order flow, trend structure, and human psychology. If a strategy ignores those things, it usually fails over time. Why most trading YouTube videos are misleading. Now here's something many beginner traders don't realize. A lot of strategy videos online are never backtested. Someone finds a pattern, sees it work 3 times, and immediately calls it the best strategy. But without large sample testing, you have no idea if it actually works. That's why backtesting is so important. It removes emotion and shows the real numbers. What beginners should do instead. If you're new to trading, don't waste time jumping between 50 different strategies. Instead, focus on 3 things. First, learn market structure. Understand trends, higher highs, lower lows. Second, use simple strategies. Complex systems usually perform worse. Third, focus on risk management. Even a good strategy fails. If risk management is bad, professional traders survive because they manage risk, not because they have magic indicators. Final thoughts. So after testing 20 trading strategies, 18 of them failed. And the 2 that worked were based on simple market behavior, trend continuation, and liquidity sweeps. Trading isn't about finding a perfect system. It's about understanding how the market behaves and managing risk better than everyone else. Because in trading, survival is the real edge. If you want, I can also show the exact backtesting data from these strategies in another video. So if that's something you'd like to see, subscribe to the channel. And let me know in the comments, what trading strategy should I test next? Thanks for watching, and I'll see you in the next video.